Secretary of the branch, CA Prashant Kumar. Learned speaker of today's session, CA E.R.Somayajulu. Senior members of the profession, respected past chairman, members of the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this direct taxes SHASTOTSAV second day on week-long webinars on direct taxes, and today's webinar on the topic comparative analysis of parallel tax regimes with emphasis on exemptions and deductions. We, the members of Vizianagaram branch, convey our heartfelt thanks to the speaker, CA Somayajulu, for immediately accepting our request to address the members of Vizianagaram branch. A new personal income tax regime for individual taxpayers was introduced in the budget 2020. This is the first year to choose between the old tax regime with deductions and exemptions and new tax regime without deductions and exemptions, but with lower slab rates while filing IT returns. Taxpayers are confused as to which one to opt for. The option for the new tax regime is available to all individuals and HFs. This is optional. Under the new tax regime is payable at lower slab rates on income up to 15 lakh as compared to the old regime. Under the new regime, the tax slabs of 5%, 10%, 15%, 20%, and 25% are applicable to each successive increase of 2.5 lakh starting from the basic exemption of 2.5 lakh till 15 lakhs of total income. The option for this concessional tax regime came with a cost. It requires the taxpayer to forego certain specified deductions. These include standard deduction 50,000, deduction under chapter 6A except 1 or 2, 80 CCD 2 or 80 JGIA, all are not eligible. Interest on self-occupied property of 2 lakh, deductions which are available by most taxpayers, and many other deductions. As a result, the concessional tax regime may not always be beneficial, but varies from case to case. Some of the benefits of a new regime includes like reduction in the tax rates and reduction in the compliance of investments. It increases the liquidity in the hands of taxpayer because of no investments they are doing. Some of the associates may not prefer to lock in funds in the prescribed investments for specified period, and flexibility of customizing the investment as per their choice without strictly adhere to the income tax saving schemes. And the disadvantages include non-availment of deductions for tax reduction. For example, SC already had a housing loan with self-occupied and he cannot claim deduction, which is a hardship for him, though he has taken a housing loan considering the tax benefits in the earlier regime. It is clear that the self-employed do not have the choice to come back to the old tax regime once the new one is opted, unless they stop having business income. So for the persons with business income, it is only one-way journey for them. To explain about many other issues involved in both the tax regimes of old and new and arrive at the beneficial tax structure benefit, we have eminent speaker with us today, CA Somayajulu, affectionately known as Ramji Garu by all. Let us gain thorough knowledge with his deliberations on the topic. Now I request CA Arunapriya to introduce the speaker of today's webinar.
Good evening, Chairman sir. Thank you so much. CA E.R.Somayajulu is the managing partner in Somayajulu and Associates, a firm of chartered accountants having its head office in Vizianagaram. CA E.R.Somayajulu was born in the year 1955 to Shri E.V.S. Sastri and Srimati Ishwara Krishnavedi. He was born and brought up in Vizianagaram, and he did his schooling and college education and articleship from Vizianagaram only. He has undergone his CA articles with Rao and Pal Chartered Accountants, Vizianagaram. He started his practice in the year 1980 and has been continuously practicing ever since. He has attended several seminars and also gave deliberations on various topics in the Institute seminars. He was awarded the Samman Award in the year 2002 from the Income Tax Department for highest tax payment in professional category, Vizianagaram. He was married to Srimati Bhavani in the year 1979, and they are blessed with a daughter, Harita, who is a software engineer settled in the USA. And he has a son, Harish, who is a triple associate, that is CA, CEW, and CS, and he has been practicing since 2010 as a partner in Somayajulu and Associates. With these few words, I take this wonderful opportunity to introduce today's session speaker, CA E.R.Somayajulu, to this brilliant gathering. Thank you.
Thank you, CA Arunapriya. Now I request the speaker, CA Somayajulu to take up the session, sir. సార్ అన్మ్యూట్ చేయండి సార్, మళ్ళీ అన్మ్యూట్ చేయండి. ఎస్ సార్, యా మళ్ళా అన్మ్యూట్లో మళ్ళీ మ్యూట్లో వెళ్ళిపోయింది సార్. ఎస్ సార్, నవ్ ఓకే సార్, యా
కనబడుతుందా? You are able to hear?
Yes sir.
Okay. Our beloved chairman Murali Krishna garu and vice chairman Vasudev Murthy garu and Prashant garu very Prashantanga untaru, very Prashant secretary garu and all other office bearers and senior colleagues like our Chandrasekhar garu, Murthy garu and Manikyal Rao garu, etc., all the participants. Good evening to all of you. Friends, of course, our beloved chairman Murali Krishna has got very good affection on me. That is why he said that my deliberations will be very useful. But your interaction may be more useful than my deliberations. That is my issue. Friends, you know very well that really we have got a wonderful team for Murali Krishna garu, Vasudev Murthy garu and Prashant garu. Only three I am saying because వీళ్ళు ముగ్గురు కూడా సార్థక నామధేయులు. అందుకు ఎందుకంటే మురళీ కృష్ణ గారు ఇప్పుడు బిజీగా ఉంటారు, అలా మరోలా అనుకోకండి, ఆయనకి యాక్టివిటీస్ ఎక్కువ. తర్వాత ప్రశాంతంగా అన్ని చేస్తుంటారు. పోతే వాసుదేవమూర్తి గారు ఎప్పుడు కావాలంటే అప్పుడు పలుకుతారు, నమో భగవతే వాసుదేవయ్య అంటే చాలా వచ్చేస్తారు ఆయన, నేను ఏదైనా లీవ్లో వెళ్ళినా ఏదైనా. సో ఫ్రెండ్స్, విత్ దీస్ ఫ్యూ వర్డ్స్ ఐఎమ్ గోయింగ్ టు ద టాపిక్ డైరెక్ట్లీ regarding the comparative analysis of parallel tax regimes. Friends, now it has become the order of the day that we are having parallel tax regimes. In fact, the lawmakers are saying that the law is being simplified, but on the other hand, the law is being complicated. It is not being simplified. Because now, as taxpayers, we have got so many difficult jobs, and how to choose and which regime we have to choose for our taxpayers. Because we have to show benefit to the taxpayer, then only we will get fee, and he is the butter and bread of us. So in fact, these regimes have created some sort of confusion also, and all these regimes are optional. Friends, in the assessment year, from the assessment year 17-18 onwards, 115 BA for manufacturing domestic companies has been introduced. And from the assessment year 2021 onwards, domestic companies and the new manufacturing domestic companies tax regimes have been introduced. Similarly, friends, now today's topic is mostly section 115 BAC, which deals with individuals and HUFs, and which are very relevant for our practice. So this 115 BAC is having a special regime, a tax concession regime. That is why it has been embedded in the Act. Where there are special rates in the Act, they will be provided in the sections. Where they are regular and normal rates, they will be provided in the Finance Act. Similar like capital gains tax, lottery tax, etc. So friends, here this tax regime, old tax regime and new tax regime, both are in existence. And the individuals and HUFs can opt for any one thing as per their choice. But that choice is limited only for once or maximum another occasion for the professionals and business people and professionals. But whereas for other sources and other than business or professionals, they can choose this option every year at the time of filing return. So friends, in the old regime, there are only 3 slabs. 5%, 20%, 30%, up to 10 lakhs. So more than 10 lakhs, it is 30%. But in new tax regime, it is 6 slabs are there. And that is from 2.5 lakhs to 5 lakhs, 5%, 5 lakhs to 7.5 lakhs, 10%, 7.5 to 10 lakhs, 15%, 10 to 12.5 lakhs, 20%, 12 lakhs to 25 lakhs, it is 25%. And after 15 lakhs, it is 30%. So the maximum rate comes only after 15 lakhs. So people apparently are so sure that the new tax regime is beneficial. But on the other hand, it is not correct. The new old tax regime is beneficial. Why? Because if you avail all the deductions and exemptions, then the old tax regime is only very much beneficial. Friends, in both these regimes, the rebate under Section 87A is applicable, is allowed, because it is not a deduction or an exemption. It is a rebate from the tax. So where the any person is having a total income of 5 lakhs or less than 10 lakhs, 5 lakhs, then he will have the rebate under Section 87A up to maximum of 12,500. So in both regimes, this 87A is allowable, and that can be availed by the taxpayers. Apart from this, friends, this tax regime is above 15 lakhs, it is 30%. But however, friends, if you take an example, suppose an X is having a total income of 7 lakhs, and he is having the eligibility for full deduction of 80C, 80D, and 80DD, 80CCD, 80CCD. So then the 80C deduction is 1.5 lakh, friends, and 80D is 25,000. 80CCD is 50,000. 80CCD 1 year. So if you avail these deductions, then 7 lakhs will become 4,75,000, and he can avail 87A deduction rebate. Then he need not pay any tax. Whereas in new tax design, the tax liability is 32,500. So you can verify, you can see that the old tax design is not beneficial, and the new tax design is not beneficial, and old tax design is only beneficial. We have worked out several permutations and combinations like this. So if we avail all the deductions and exemptions fully, then old tax regime is only advantageous to the taxpayers. And where the income is very high, then the new tax regime may be beneficial. Friends,
Ramjigar, you can share your PPT, sir. We have already circulated to members through mail and WhatsApp. You can share your PPT in this presentation while you are explaining. Sharing rights on the sir. Share screen and on the sir. Kenda. Share screen dwara you can share the PPT, sir. What you have prepared, you can share the slides.
1 minute. I should share screen. PPT. Share screen. Mail. Lemon, huh?
Yes, sir. కనిపిస్తుందండి. ఓకే సార్. ఓకే. యా.
Friends, the first slide is introduction and scope. Friends, you can see that I have already explained to you that it has become a common phenomenon that law is stated to have been simplified, but on the other hand, it is being complicated. And in this process only, the Income Tax Act has introduced from the assessment year 21-22 onwards, parallel tax regimes have been introduced. Friends, these two tax regimes are 115 BAC and 115 BAD. Friends, don't think that 115 BAD is bad. It is only the concession rate of taxation. So, apart from this, friends, you will see the earlier tax regimes, which I have already explained, that from the assessment age 17-18 onwards, that manufacturing domestic companies will have a concession rate of 25% and more deductions will be allowed. The same fashion from the assessment year 2021 onwards, domestic companies and new manufacturing domestic companies will have a concession rate of taxation at 22% and 15% respectively, and they are also not having any sort of deductions that are allowable or eligible, and hence you have to straightaway pay tax at the concessional rates. These three tax regimes are optional. You have to exercise the option once at the time of filing the return of income. Because once you exercise the option, you cannot go back, and the option will continue forever. So similarly, friends, from section 115 BAC to BAD have been introduced from the assessment year 21-22 onwards, and out of them 2015 BAC is applicable to individuals and HUFs, whereas 115 BAD is applicable to the resident cooperative society. Thus 115 BAC I already explained, some concession rate of taxation is there, that is 5%, 10%, 15%, 20, 25 and 30. More than 15 lakhs it is 30%. But deductions are, no deduction is allowable or eligible. But only thing is, 2 deductions are there. There are 3 deductions are allowable in section 115 BAC also, BAC of the NPA. One is 80CCD2, that is new pension scheme, in which if the employer contributes to the employee's account, then if it is a central government, 14% of salary of the employee, or if it is any other employer, 10% of the salary of the employee are eligible for deduction. Whereas 80JJAA is an additional employment cost, where 30% of the additional employment cost will be allowable to the SC or the person or taxpayer. The same fashion 80LA is a unit in International Financial Service Center owned by any entrepreneur, including individual or HUF. Then, if certain conditions are fulfilled and satisfied, 100% of income is eligible. Other than 3C, no deductions or exemptions are allowable under section 115 BAC of the IPA. Friends, as already stated and explained, these resigns are all optional. What I said is another 5 resigns. All are optional, and the option has to be exercised very cautiously. And if you are having a business or professional income, this option is permanent and you can't go back. And in respect of 115 BAC, only one time you can go back and you can't come back. Similarly, if you do not, if the SSE or the person fails to comply with the conditions in section 115 BAC of the ITR, the old regime only will apply, and all the provisions accordingly will apply. Friends, here this option has to be exercised by the person on or before the due date for filing return under section 139(1) of the ITR in respect of business or professional income persons. In respect of others, that is, who are having capital gains, other sources, etc., income from household, etc., etc., they can exercise option every year at the time of filing return. So here, in my view, if the return is filed belatedly later on under section 113 and 4, the option has to be exercised on or before the due date for furnishing return under section 113 and 1 of the ITR. That is my personal opinion. So once you exercise option, it will continue. And once if you are not having any business or professional income, you can switch over to the old regime also. Friends, in ITR 1 and 2, this option has been embedded and you need not file any separate form. But in respect of business or professional persons, you have to file form IB along with the return of income or at the time of due date for exercising option. Exercising option. Then only the option will be valid. Apart from this, the deductions which are not at all allowable under the new regime are 20. All deductions and exemptions, like in case of salaried class also, like house rent allowance, any other allowances, leave travel concession, union allowance, minor child allowance, etc., etc., daily allowance to MPs, MLAs, etc., special allowances are not at all allowable under the new regime. And moreover, in respect of the deemed income, the SSE will have a rebate or exemption of 1,500 per child up to the positive income of the deemed nature, that eligibility, that exemption is also not allowed, not at all allowed. Moreover, additional depreciation is not allowable, and brought forward losses in respect of additional depreciation are also not allowed. But provided, friends, the brought forward unabsorbed additional depreciation can be adjusted by enhancing the opening and down value of block of assets. That you have to keep in mind that while filing the market, while computing the income. Friends, all other special deductions are there, what I mean say site restoration fund, or what I mean say exemption in respect of special units and special units, etc. are there. Too many exemptions are there, direction of tea, coffee and rubber development allowances, which are not, for my practice, they are not much relevant. So I am just telling you all these special deductions which are allowable. Otherwise, if the conditions are fulfilled, they are not allowable under new design. If you opt for the new design. And most important thing here is self-occupied house property, where the interest on capital, housing loan up to 2 lakhs is allowable in the usual manner in the old design. But in the new design, this 2 lakhs not at all allowable. So it is a great hardship to the employees and also persons who are purchasing houses for their housing purposes and for their residential purposes. They will face some hardship. Friends, apart from this also, one more thing, that the loss, if the property is let out and if the loss is there because of interest on housing loan, etc., up to 2 lakhs, the loss is allowable. And more than 2 lakhs, if the loss is there, that loss will be allowed to be carried forward for the subsequent 8 years in the old design. But friends, in this new design, this loss which arises in the let out property also cannot be given any set-off against any other income, which is also a very great disadvantage, friends. And this has to be addressed. Otherwise, the new design may not be much useful to the taxpayers. Friends, one more thing. Suppose a person is having only other sources, capital gains, etc., and is not having any business or professional income, then if he opts a new design in 1 year, and by that time he is having some unabsorbed brought forward losses under the head income of property, then after some time he switches back and reverts back to old design, then such losses will be again allowed as set off or not. And this is a area where I cannot say anything, and only a clarification has to be given in this regard. And in my opinion, such losses again must be allowed in the old, because the SSC opts for old design. In the old design, that must be allowed, provided that 8 period has not been lapsed. Has not been lapsed. Friends, the tax rates I have already explained. It is the 2.5 lakhs it is exempt. From 2.5 lakhs to 5 lakhs it is 5%. From 5 lakhs onwards, it is up to 7.5 lakhs it is 10%. From 7.5 to 10 lakhs it is 15%. And to 12.5 it is 20%. So 12.5 lakhs to 15 lakhs it is 10%. Now above 15 lakhs it is 30%. This I have already explained, friends, and 87A is applicable and eligible for both the results. Friends, this I have explained. These are the special concession deductions, specified deductions and exemptions which are not allowable. Under the new design. And friends, I have already explained regarding interest on a housing loan, borrowed capital, which is not allowable under the new design. And similarly, the deductions from salary under 60 are also not allowable under the new design. That is standard deduction 50,000, entertainment allowance, and also tax on professional employment. That is, other professional tax are not allowed. Additional depreciation is not allowable, friends. At the same time, regarding the tea, coffee, and rubber development accounts, site restoration fund, scientific research is also not allowable under the new design. And so there is a capital expenditure in respect of specified business under section 35 AD of the ITR, other than land, goodwill, and financial instruments. This is also not allowable under the new design. This specified business is mainly cold chain facility, warehouse, etc. etc. Friends, agricultural extension project, that is also not allowed. Friends, family pension deduction, 57(2)(a), in which family pension, a person beneficiary of family pension will have a deduction of 33 1/3% of the pension or 15,000, whichever is lower. This is also not allowable under the new design. Then chapter deductions, under chapter 6A, no deduction is allowable except only 3, that is 80CCD2, 80JJAA, or 80LA. So I already explained, friends. 80CCD2 will speak about the employer's contribution to the employee's pension account. If the employer is a central government, the deduction will be 14% on the salary of the employee. The salary means the salary includes DNS elements but excludes all other allowances and benefits. Similarly, if the employer is other than the central government, then the deduction up to 10% on the salary is allowed. This deduction is available under the new design. 80JJAA, friends, is for the additional employment, which creates additional employment. So it is very important in India because unemployment is very much there. So with this subject only, this 80JJAA is allowable, which speaks about 30% of deduction from the what I mean say from the additional employment cost is allowable under section 80JJAA, and whereas 80LA is an international financial center unit in which the unit is owned by an individual or an issuer. In such unit fulfills certain conditions as per that 80LA section, then 100% of the income is eligible for deduction. Under new regime also. The losses or depreciation attributable to the specified deductions or exemptions are not allowable. They cannot be given set off. And I already explained regarding self-occupied house property and also let-out house property. In both these things, the losses are not allowable. The losses will be allowed only to the extent of positive income in let-out property, and the balance will be ignored. And in respect of new resign. In any other direction, the requisites or allowances are also not allowable in new resign. Friends, I already explained regarding brought forward losses, where if the SSE switches over or reverts to the old resign, and if he fulfills all other conditions in the respective section, then whether he is eligible to claim the unabsorbed losses, brought forward losses in the year in which he opts for the old resign. But there we require a clarification defense in an authoritative way. So this has to be represented at the address before the CDBT meeting. Friends, we already discussed which resign is beneficial to whom. You all know very well that as per this computations, etc., if you go through, the old resign is only much beneficial to the taxpayers, because the taxpayers are all prudent business people or prudent people who will actually make all sorts of savings and also investments, etc., etc. So they don't leave the deductions or exemptions without availing them, and by paying taxes at the concession rates, which are also high. So the old resign is very much beneficial to some extent, to some person, and the new resign is beneficial for the people who are having very high income groups, very high income brackets. Friends, here we have got a very tough task in future, because you have to work out the computation part of every person SSE, both in old and new resigns, and then you have to advise accordingly. And once you advise the business people to go for a new resign or stick to a old resign, you have to continue that. But if you go to the new resign, then in respect of business or professional people, you can't come back. You can come back only once. Later on, it is completely closed. So we must be very cautious. We must be very careful in taking decision in this regard. We have to work out the computation part of the incomes well in advance, like advanced tax. That is also another job to us in addition to the existing jobs. So friends, it's very, very important to understand the situation and to go case by case in respect of these results. Friends, 115 BAC, whatever is there in the section, and exercising option, tax rates, deductions and exemptions not allowable, etc., etc. I already told you, the very important thing is that where the unabsorbed additional depreciation is there, such additional depreciation must be added to the opening written down value of the block of assets, and accordingly, higher normal depreciation may be claimed in respect of new tax regime also. In respect of new tax regime. And besides 115 BAC, we have got 115 BAD, resident cooperative society. Of course, this section is not bad. It's good only friends, because they have got concessional rate of taxation. And in this, friends, resident cooperative societies will get advantage of tax rate at 22%. Since normal rate of cooperative societies is from 10 rupees to 10,000, 10%, From 10,000 to 20,000, it is 20%. More than 20,000, it is 30%. So, but here it is a flat rate of 22%, and it can be availed from the assessment year 21-22 onwards. And here also this scheme, this regime is also optional. And once you exercise this option, it applies to all subsequent years, and you can't go back in this from this option. Friends, here also the special directions and exemptions like 10AA, 35B, AD, 35CC, etc. are not allowable, and they are not allowable, and external depreciation is also not allowable. And only two directions are allowable under this regime, section 115 BAD also. They are, one is 80JJAA, which I already explained with regard to additional employment cost. Secondly, friends, 80LA, where the resident cooperative society owns or operates a unit in International Finance Service Center, then such unit also is eligible for 100% deduction from income, provided satisfies the conditions in the conditions stipulated or provided in the said section. So this is also an optional regime, and once you opt for it, you have to straightaway pay a tax of 22% without availing deductions other than those two deductions. Friends, here also the option has to be exercised on or before the due date for furnishing the income in Form 10IF, which is a simple form, and it has to be electronically uploaded into the form. Friends, first introduction itself I told you regarding domestic companies. These regimes are three. One is 115BA, another is 115BAA, and third one is 115BAB, which are applicable to the domestic companies, especially manufacturing companies. These regimes have come earlier to the assessment year 21-22 friends. One of them is 115BA, which has come into force from the assessment year 17-18 onwards, and the tax rate is 25% as against 30%. But here it must be a manufacturing company producing articles of things except the 11th schedule, something like that, and services, etc., where you have to avail the exemption by exercising the option under section 113 and 1 of the IPR, that is, on or before filing the return for under section 113 and 1. This option has to be exercised. And once you exercise this option, you can't go back, and you have to stick in the new section, new regime only. And here also, the special deductions and exceptions or exemptions are not at all allowed, except 80 JJAA is allowable in this because it is additional employment cost, which is allowable under section 115BA. But the other deductions are not at all allowable. Of course, normal depreciation is allowable, and unabsorbed brought forward losses, unabsorbed depreciation losses are allowed. But unabsorbed depreciation losses or unabsorbed brought forward losses relating to the deductions are attributable to the deductions which are not allowable. Such losses are not allowable and cannot be given set off. It is produce the income where the SC exercises for the new result. So that you have to keep in mind, and you have to file a form 10IB for exercising option on or before the due date for furnishing return of income under section 113 and 1 of the IPR. And that exercising that option will continue forever and to all subsequent years also. Similarly, 115BAA, friends, this is head of only domestic companies, whether it is manufacturing, trading, or new manufacturing, everything comes into play. And this is also a concession rate of tax, and the tax rate is 22% here. And similar to 115BA, here also the special deductions and exemptions are not at all allowable, and this is also optional. You have to exercise the option on or before the due date for furnishing return of income under section 139(1) of the IPA. And this is also an optional section. And once you exercise the option, it will continue permanently and for all subsequent years. Here also, friends, no deduction is available except ATJJAA and ATM. ATM speaks about intercorporate dividends. These two are allowable, and this section will come into the play from the assessment year 2021 onwards, and you have to file the Form 10 IC for exercising option. And friends, another optional design is 115 BAB. Friends, this section speaks about the manufacturing domestic companies which started in 17 and 19 register, but which produces for 31st March 2023. Such companies are eligible to exercise this option, and as per this action, the tax rate is 15%. Yeah. So gradually the tax rate has come down because friends has been watered down and 25, 22, and 15%. So this is also an optional exception. You have to exercise the option on or before the due date for commission become under section 139 of the IPA, and no deductions are available in this section also except ATJJAA and ATM of the IPA. Friends, where the option becomes invalid under section 115 BAA, then you can avail option under section 115 BAB. That option, that facility has been given in the section. So that is also very important, friends, for this section, this real tax section. Friends, coming to the TDS provisions, the employers will be very much what I mean in a confusing state whether to how to deduct the tax, whether it is to be deducted under old regime or under new regime. So this is a very confusing state of affairs. So there the CBDT has given a circular dated 13/4/2020 stating that the employer must obtain a declaration and intimation from the employee at the beginning of the previous year regarding the tax regime and tax rates, whether he opts for a new regime or whether he opts for the old regime. And accordingly, the tax has to be deducted. Friends, here we have to keep in one thing in mind, that exercising option and submitting intimation are quite different. The option intimation has to be submitted at the beginning of the previous year, but the option can be exercised at the time of filing of return. At the time of filing of return, if the SC changes or the employee changes his mind, and he opts to new regime or from new regime to old regime or from old regime to new regime, then he can do it. Then accordingly, the tax has to be adjusted at the time of filing by way of self-assessment tax, or it may result in refund. Then the SC will, the person or the SC or the employee will get the refund in due course. So that we have to keep in mind that intimation of option to the employer and the exercising of option are two different things which can be exercised at different points of time according to the will and pleasure of the SC or the employee. So that is also very important to have to. I already discussed, friends, in our deliberations itself, that unabsorbed additional depreciation can be adjusted by way of increasing the value of the written down value of the opening balance, opening return given value of the block of assets, so that in the year relevant assessment year, you will get more normal depreciation. That is only the advantage you will get in this new design. Kృష్ణ గారు వినపడుతుందా?
వినపడుతుంది సార్.
స్లైడ్స్ అన్నీ అయిపోయాయి.
సార్ చాట్ బాక్స్ లో అవసరాల శ్రీనివాస్ గారు ఒక క్వశ్చన్ పోస్ట్ చేశారు సార్.
చూస్తున్నా.
శ్రీనివాస్ గారు అన్మ్యూట్ చేసి యూ కెన్ ఆస్క్ డైరెక్ట్లీ సార్.
Srinivas sir, I have gone through the query. 10IC is a very important form because in the company's return form, there is no option of exercising under section 115 BAA. So the form has to be necessarily submitted on or before the due date in 10IC of the form 10IC into the upload into the portal. Otherwise, the concession rate of taxation may not be available. And in appeal, whether the delay can be condoned has to be put into. I cannot say anything because there is no such mechanism or machinery in the act to condone the delay with this. Only thing is you can do is 119(2)B. You can go for 119(2)B to the Honorable Commissioner and the delay can be condoned. And your exercising option under section 115 BAB may be accepted, may be validated. Thank you very much, sir.
Members, for any queries, you can unmute yourself and you can ask. శ్రీనివాస్ గారు అన్మ్యూట్ చేయండి సార్. అన్మ్యూట్ చేయండి సార్. Yes, sir. Yeah. Now you can speak, sir.
Yeah, I already posted in the chat box.
Yes, sir. Yeah.
A company has opted for concessional rate of tax under section 115BAA and filed its return of income within the due date of filing the same. But the relevant form 10IC was filed belatedly. That means subsequently, maybe 31st March or something like that. So will it be accepted? Because the company has opted for concessional rate of tax, but that particular form was belatedly filed. Will it be accepted as a technical glitch? If not, what are the chances at appellate level?
Srinivas garu,
Sir.
వినపడుతుందా?
వినపడుతుంది సార్.
ఇందాక చెప్పాను, ఆల్రెడీ చెప్పాను ఏంటంటే this is not a simple technical glitch, sir, because you are going for a concessional rate of taxation. You are asking for an availing a tax concessional rate, of course, without availing any deductions you are asking. So the NIC form is very important for exercising the option, because in the return form for company there is no provision or any information with regard to form 10IC. Form 10IC has to be necessarily filed on or before section 139(1) of the ITI. Here I will tell you one thing. On the reverse side, suppose if you have filed the Form 10 IC in time, on or before the due date for furnishing the return of income under section 139(1) you filed, but you filed the return of income belatedly, then your deduction will be available. Concessional rate of taxation will be available.
Other way around.
The course of action is you have to go to commissioner under section 119(2)(b) of the ITI.
119(2)(b).
And then IC, you have to ask the reasons why you have related. You can say that this is the first year of this thing. You can't say because assessment date 2021 is the first year for 115 BAA. 21-22 second year. So first year for 2021 you had filed.
Yes, sir.
Form 10 IC, you have got a chance to get the form belated, condoned by the Honorable Commissioner if there is genuine hardship.
Okay.
Prove the genuine hardship, why the delay occurred, at what stage it occurred, that you have to explain. Otherwise, it is difficult to get the concession rate of taxation. Because the conditions fail, then it will go to the old regime only. That is 30%.
Okay, sir.
Okay, sir?
Thank you very much.
Welcome, sir. Welcome.
Any other member? Any queries? So Ramji gar, I have one query. For the senior citizens and super senior citizens, the basic exemption limit, will it be the same in the new tax regime?
Yes, yes. New tax regime also the same. You need not
Basic exemption limit is same for the senior super senior citizens and super senior citizens.
Super senior. 3 lakhs. Yes, sir.
Yes.
That is there.
Okay.
That is not
But
eligible.
87-year rebate is not eligible under new
Eligible
regime.
for both regimes. Tax, that is old and new, both regimes. Up to 12,500. And all other surcharges, health and education, all these things are as it is for all. So only thing is, you can't avail the chapter 6A deductions except
Yes, sir.
1 or 2.
Yes, sir. Yes, 80-62
You can't
is okay.
avail the 80TT also, where there are certain genuine hardship like if the SSC is a physically handicapped,
Yes, sir.
80U. If the SC is physically handicapped dependents, he can't avail 80TD. You understand? So such genuine hardship SCs will face hardship only. Their hardship will not go away. So two tax regime is not much beneficial as a whole. In my
Sir,
opinion.
even NPS also
opinion.
not eligible, no, sir. NPS, National Pension Scheme, 80 CCB.
National pension scheme is eligible, not which one, sir? That is eligible for the
Old regime, yeah.
ATC, National Pension Scheme, where the employer contributes, then that money is that contributes.
Yes, sir. Yeah, that is okay. Yeah.
Under new regime also, 14% or 10% of the salary in respect of central government employees or in other employees. 14% ATCCD, what I mean say 2, ATCCD 2, subsection 2, you can see.
So, one question from RVL Narsim, sir. One question from RVL Narsim Garu. We have to file the 10 IC for the first year or every year? Form 10 IC.
Only 1 year. First year. You need to file because you can't go back. If you opt for it, suppose here the peculiar thing is there is no timeline prescribed in these sections. Suppose if the company is registered in the year 1920, if it goes in the regular regime for 1920, 2021, 21, 22, and it can opt on 22, 23. There is no timeline. You can opt at any time, but once you opt for you resign, you can't come back. So once if you file 10IC, you need not file every year again, and that is enough. And every year new resign only will come, and concession rate of taxation only is available.
Any other member? Any queries?
ఇంకో సబ్జెక్ట్ ఏదో కలిపి వచ్చింది మురళీకృష్ణ సరిగ్గా మనకి టైం సరిపోయింది.
Ramji Garu, it seems no more queries or doubts from the delegates. You have expressed speed, you have covered the topic in short. One more time. But elaborately, you have covered all the issues, of course. That is, but you have covered so fast so that time, within short time, you covered all the slides, all the issues.
You should have given me only 1 hour time.
So considering there are no more queries from the members, let us conclude the session. I request the secretary, Prashant Kumar, to vote of thanks.
Respected Chairman, CA Muralidharan Garu, Learned Speaker, Senior Member of the Profession, CA E.R.Somayajulu Garu, known as Ramji Garu, Past Chairman, Senior Members, and other dignitaries, good evening to all. I am privileged to propose a vote of thanks for the second session on my own behalf and behalf of the Vizianagaram members. Sir, I convey my heartfelt gratitude for accepting and sharing your knowledge with us. Sir, your experience and deliberations are given instant enlightenment to all our members who joined in this webinar. Sir, our special thanks for your comparative analysis of old scheme, tax scheme and new tax scheme. Thank you very much, sir, for your wonderful deliberations. Members, regarding the third day session details, topic is in-depth study of section 9B and section 45, subsection 4 of the Income Tax Act 1961 as amended by the Finance Act 2021 by CAU Ramakrishna Garu from Vizianagaram. I request all the members, please join and get benefit out of it. Thank you one and all. Thank you very much, sir.
Thank you, Prashant. Thank you, Ramji Garu. Thank you very much.
Thank you, sir. Thank you. Thank you very much.
In busy schedule, you have spared your valuable time with members of Vizianagaram branch.
No,
It's really great.
Thank you very much. And if
Thank
I
you, sir.
did anything
Thanks a
wrong,
lot.
kindly excuse me. Thank you.
Thank you, sir.
షేర్ అనాలా టాప్ షేర్